Good morning, options traders. Well, it was a little bit of a wild day yesterday for anybody on the Facebook group here. As you probably noticed, we were kind of under attack for a while. And by that, I mean we had several people coming to join the site, and the second I accepted them, we got bombarded with ads for binary options. And come over to this exchange and make guaranteed $2,300 a day trading binary options. So they immediately got booted, and I tried to clean up all of the ads, mostly because I'm just trying to, especially for the new traders out there, protect them because they don't understand what it is. It sounds good, but they're just horrible deals in most cases. But I did have a lot of people saying, well, what in the world is a binary option and why are you against them? Well, I'm not, again, necessarily against binary options. I'm against them when they're on unregulated exchanges, which is what they were doing. But let's take a little closer look at binary options, and we'll look at some interesting features about them, and then I'll show you why you have to be so careful on unregulated exchanges. So binary options, as the name implies, they pay off either $0 or $1. That's it. As you know from regular options, if you buy a call option, yeah, it could pay off $1 if the option is $1 in the money, but it could also pay off 2 or 3, 5, 10, 20, could pay off anything. Just depends on how high that stock price goes. That's not true for a binary. It's a little bit more like a bet. I'll bet you that my football team's going to win. If it wins, you pay me $100. It doesn't matter by how many points they win. It's just a question of if the option went in the money or not, and then it's a $100 payoff. So let's just take a look at a call option. If the stock is above the strike at expiration, that's the key. It cannot be equal to. It's got to be above it. It has to be in the money. Then the option is worth a flat $100 payoff. On the other hand, if the stock is below or equal to the strike, it's out of the money and it pays off nothing, and you just lose the amount that you paid. Now, sometimes traders would look at this and say, well, what's the point if it only has a fixed payoff? Well, remember, price is the equalizer. We can make any financial deal fair by just adjusting the price. And that's exactly what will happen here with binaries. They're a whole lot cheaper. And in fact, they're always priced below $1 or below $100. Wouldn't make sense to pay $105 for something that could only be worth $100. So that's kind of the big benefit. Another one, especially for short-term traders, is that the expirations come in all kinds of sizes and dates. And in fact, they can be measured even in minutes. So yeah, you could say, I think gold's going to be up above a certain price in the next 5 minutes, and take a binary option on that. So because of this fixed payoff, their profit and loss diagrams look quite a bit different from the ones that you're used to seeing. This is what they'll look like for our $100 call, assuming you paid 60 cents over here for it. So if you pay 60 cents or $60 for one contract, if the stock is $100 or less at expiration, which remember might be minutes away, you lose your 60 cents. But if it's above 100, no matter how high, you just receive the $100 payoff, and of course minus the amount that you paid. So in this example, you would have a maximum gain of 40 cents. So notice that there is a vertical shift with the profit and loss diagram. And in fact, when you look at financial engineering, different aspects of things that you're trying to construct, this is the only tool we can use for a vertical shift. So if we're talking about a regular call option, as you probably have seen, we always have this diagonal at expiration. Or if it's a put option, it would be a diagonal in this direction. But we can never just get a vertical shift, except with a binary option. So that's kind of a neat little feature about it. So hopefully this helps you to understand how they work. It's either 0 or 1. Now, to understand some interesting insights about regular call options, the ones that we typically talk about in this forum, let's step back a little bit and talk about what are called exotic options. And exotic options is a whole nother field. Just when you thought that regular options are complicated with calls and puts, there's an entire universe of exotic options, and they can get a lot more complicated. But the exotic options trade OTC or over the counter. They're just privately negotiated, so you might have to go to a JP Morgan and have an exotic option contract drawn up. Now, with the binary options, there are two types of exotics. You have a cash or nothing binary, and you have an asset or nothing. So let's take a closer look at the cash or nothing. What does that do? Well, if you buy this option, if it's in the money, again, can't be equal to that strike, but if it's in the money, you will receive the strike price. If it's out of the money, you receive zero. So you're probably thinking, well, that sounds like a digital. Well, remember, the strike price could be different. But if they reduce it down to a $1 fixed or 1 unit of currency, then that's what makes it a binary option. So a binary option is just a more reduced form of a cash or nothing exotic option. So keep that in mind. Now let's take a look at the asset or nothing option. What would happen here is that, let's say you buy a $100 call, and if it's in the money, you receive the shares. In the previous example, you received the cash. But you're going to receive the shares by paying nothing. Now that doesn't mean you get them totally for free. You had to buy this asset or nothing call. But once you pay for it, if it's in the money, you just simply get the shares for nothing. And if it's out of the money, like all options, it's worth zero. Now here's where it gets interesting. What if you bought and sold these? What if you bought a $100 asset or nothing call and you sold the $100 cash or nothing call? Well, let's take a look. What if the stock was at 105? What would happen is you would receive 100 shares of stock from the asset or nothing call, but because you're short the cash or nothing, you would have to pay the $100 strike per share. What does that sound like? It sounds like a regular call option, and that's exactly what it is. So sometimes you'll hear these people try to make the binary options sound like they're super exotic, and they're really just simpler versions of what you're already trading. They're like the building blocks of regular calls. Well, if there's some neat features about binary options, what are the risks? Well, the big risk, there's really two of them. First, the smaller of the two is the bid-ask spread. So let's say that you're looking at an at-the-money option with roughly a 50 delta. That's about a 50% chance that it will expire in the money, which means it should be worth $50 or 50 cents. So if there's a 50-50 chance of something happening, like a coin flip, you should be willing to pay half of that. But you're going to find on these exchanges you might have a bid of 40 cents and an asking price of 60 cents. You have an enormous edge against you, whether you are the buyer or the seller. So I often make the analogy like with a football bet. It doesn't matter if you think your team's going to win if Vegas has a 20-point spread against them. And that's what's happening here. The odds are ridiculously stacked against you. But the bigger problem is that they trade mostly on unregulated exchanges. A lot of these are overseas. They don't use what's called a VWAP, volume weighted average price, which means the prices can get manipulated going into the close. There are horrendous stories, look them up on Google, about these unregulated exchanges and where things are manipulated. You should have been paid off and you weren't. You shouldn't have lost and you did. And, but if they're unregulated, there's really nothing you can do. Now, there are a few, Nadex is one. There are a few regulated. So if you are going to explore the world of binary options, absolutely be sure that it is on a regulated exchange. So anytime you see an ad for these binary options on unregulated exchanges, always remember you have a binary choice, yes and no. And I hope now you understand the one to choose. If you'd like to learn more about the art and science of options trading, please check out the Alpha Trader course and strategy lab at optionsatoz.com. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.